Well, we're back with you to take a look at your grain trade in this segment with a little extra help from Brian Hoops of Midwest Market Solutions in Springfield, Missouri, where I understand, Brian, you guys in that area had quite a bit of rain last night.
Yeah, it was all overnight and a very nice morning. Temperatures have cooled off, and yeah, things are looking pretty good. Looks to be pretty nice rest of the day.
Okay, so we had the planting progress numbers from USDA yesterday, and admittedly, nationwide, the corn planting progress pretty much caught up with where it normally would be by now. The soybean planting progress moved right ahead as well. With the heavy rains that we saw take place in different parts of the Midwest, is that going to be helpful or hurtful to the grain trade right now?
Okay, so if you are in an area where you have your crop planted, this is a great weather forecast, great weather actually for you. You've got warm temperatures, very rapid emergence, a lot of soil moisture. But if you're in those areas of some of the Dakotas along that I-90 corridor in southern Minnesota, northern Iowa, it's tough. You know, there's a lot of areas that have hardly turned any wheels at all, looking for some opportunities to try and dry out enough to get in the fields, and that is hard to come by. There's about one day that looks to be real suitable for those areas that are wet yet for field work this week, and they need 2 or 3 days.
So on the corn market, with the progress that we saw where it caught up with the normal pace nationwide, admittedly not in the northern states, but nationwide we're about on the average pace. Some folks thought maybe that would pressure the corn market. That didn't happen overnight. Is the corn kind of oversold to a degree that it was able to bounce like that or not?
Yeah, I think that's part of the reason. Yeah, we are oversold to a degree. There's also some reports coming out that the corn market's reacting to that the China Ag Ministry has stated that corn production estimates are closer to 210 million metric tons. And in the report we saw last week, USDA said it was 225. And so there is some support from that news, as that would drop world ending stocks to probably around 144, 145 million metric tons. Longer term, that's another bullish fundamental for this corn market, and it gives us good support. And so, we're seeing a little bit of a reaction to it today. You have a little near-term negative fundamentals with the catch-up in the planting progress and a great start to the growing season. But longer term, you've got those long-term fundamentals that are supportive.
We do have July corn up 2 1/4 at 398 3/4, and December up 1 3/4 at 416. However, it's like we bumped our head on the soybean trade. They had such a big move yesterday, and now today we have July down 8 1/4 at 1009.5, and November down 6 3/4 at 1016.5. Did they overdo it yesterday?
Again, yeah, that's part of the reason technically, probably a little bit overdone. And soybean meal was the upside leader yesterday, and you can see today it's down sharply. Again, below its uptrend line, 2 consecutive closes below an uptrend would indicate that the downtrend has started. But there was some rumors yesterday about China and the United States coming close to reaching a resolution on their trade disputes, and former Governor Branstad has now said that they are pretty far apart. So there was a Newswire report very early yesterday in the trading session, and then a little later in the day it kind of backed off of that report that we were getting close, and that has pressured the soybeans and soybean meal markets.
What about the wheat trade? Let's take a look at our wheat in Chicago, July. We are down 1 1/4 at 490. On Kansas City wheat this morning, we now have that July contract quoted at 506.5. That's down 3 1/4 cents, but it's still about 8 cents off of our overnight high. A lot of weakness here in the wheat market when some analysts thought that maybe technical support would hold. Minneapolis wheat, we'll take a look there as well. We have the July contract. It's down 1/2 now at 601. It did dip below $6 momentarily during the day. Brian, we're going to take a break, and then we'll come back and we'll talk more about our outside markets and this livestock trade. A lot of negative pressure there. We'll find out why when we come back. We're talking with Brian Hoops of Midwest Market Solutions, and I want to get his thoughts on this outside market activity, a big move in the dollar and in the Dow this morning. On the Dow Jones Industrial Average in New York right now, still down almost 180 points. We're down 179 at 24,720. On the dollar value, though, going the other direction in a big way, we have been trading much, much higher today. June futures on the dollar index up 630 points right now at 93.090. We had been well over 700 points higher earlier in the day. Quick look at the crude oil trade as well. On the West Texas Intermediate crude, June is down 16 cents at 70.80 per barrel. Heating oil trade, a lot of times will follow suit on the NYMEX, and right now June futures are down, or excuse me, they're up about 0.8 of a cent at 225.8 right now. Let's go back to Brian Hoops and talk about what's going on in this livestock trade. We had just a few scattered reports of maybe a few cash cattle sales yesterday, but it was surprisingly low, about 112 to 113. There was no indication about what kind of quality of cattle those were. But you and I were talking during the break here, Brian. You said you're starting to hear some rumblings that maybe cash cattle trade is starting to kick in already.
Yeah, we're starting to hear a little bit more trade at 116. That is in Kansas, Nebraska. There's some cattle that are being sold at that price level. So again, sharply lower from last week, and probably not a surprise given that we were limit down in the cattle yesterday and saw some pretty big losses here this morning once again. Now we have bounced off of our lows. Maybe some hedge lifting coming in and giving us a bounce. There's probably some, bargain hunting as well, thinking that June holding such a huge discount already to the cash market should be bought in here where there's maybe not a lot of downside risk, more risk in the cash falling than the futures falling from this price level.
So it's kind of that chicken and egg dilemma here. What was first? What dropped first, the futures trade or the cash market here this week?
Yeah, well, we had some cash trades like Friday, Saturday that was pretty negative, and I think that's really what spurred the futures to drop yesterday, and then the cash markets, were imploding again this week. We're expected to see more selling coming into the market in here. So, the cash is weak, and the futures trying to anticipate it, but right now they're well ahead of the game, thinking that cash is going to be 103, 102, 103 area in the next several weeks, and so the cash market is certainly not quite to that level yet.
Very intriguing. June live cattle right now are down 97 cents at 103.65, and we have the August down $1.10 at $100.80. It actually got as low as 99.55 early in the day today. October down 103 at 104.25. All these are well off of their earlier lows of the session, anywhere from about $1 to almost $1.40 or so off of their lows. Feeder cattle trade right now. Let's take a look at the nearby May, down $1.05 at 134.35. We have August down $1.28. We're now at 139.10. Lean hog trade had a big surge in the market recently, but we have it backing up quite a bit today. June lean hogs now down $1.50 at 74.65. Meanwhile, July down 137 at 77.35. Does that mean the bullish technical indicators are out the window today?
Yeah, probably for today anyway. The cash markets are starting to weaken up. We saw a drop in some of the cutout values and the product values yesterday. There's a very strong seasonal tendency in both the cattle and the hogs to work lower from now until about the 28th or 29th, right around Memorial Day time frame. So we do expect to see this hog market go back, test the lows in the 72.50 range before taking another move back to the upside later into the summer.
Interesting stuff. Thanks for commenting on all the markets today, Brian. Good to visit with you. Brian Hoops of Midwest Market Solutions in Springfield, Missouri.